Hello friends, welcome to this lecture. In this particular lecture, we'll try to understand what is SOX compliance and then we'll discuss the other topics which are around the SOX. So if I'll discuss about SOX compliance, so basically this SOX Act, Sarbanes-Oxley Act was passed in year 2002 and this is developed by two guys, mainly Paul Sarbanes and Michael Oxley. So if you'll see, the last name of both these gentlemen has been combined and the name has been given Sarbanes-Oxley. Basically, they have created this act really to safeguard the corporate governance and accountability from various kind of financial scandals or frauds which are happening in the corporate. So this act was mainly developed to protect that or safeguard the corporate governance. This act, Sarbanes-Oxley Act, was actually passed in year 2002 by the United States Congress, really to protect the interest of various stakeholders, shareholders, and of the general public as well. I mean, this act was set up with the hope of discouraging the corporate fraud which was happening, protecting investors, refining various kind of financial disclosures, and really it was designed to improve the transparency in the financial reporting and corporate governance, and act upon a comprehensive internal check and a kind of balance system. Other than that, this act has established really a kind of a deadline for the corporates to meet the compliance. It also published a kind of a rule book on the requirements which needs to be maintained. And this law really holds the corporate management accountable. Now we'll see some more details related to the SOX compliance. This law really holds the corporate management accountable, like I discussed, CEOs, CFOs, board of directors, all the public accounting firms that may work and conduct various kind of audit for the various public companies. And in case of SOX, this is the thumb rule that okay, the integrity is very important. So what do you mean by integrity, if I'll say? So integrity means the people are not able to tamper with the data and make sure that okay, the data which is required, it is accurate. So in addition to that, both your CEOs, your CFOs, they must certify that okay, the accuracy of the company's financial record and the annual report. And CEOs and the CFOs who sign misleading or any kind of fraudulent reports, let's say, they can be prosecuted if they found guilty. And penalties may include up to 20 years in a prison, and fine can go up to 5 to 10 million dollars. So this is how the stringent this law is, which the corporate really needs to obey. And again, the thumb rule is it needs to be make sure that okay, the data which is available, that is accurate and no one is able to temper that data. So what we have discussed in this particular lecture, we discussed about the SOX compliance, who actually developed this law, when it was passed, and what was the main idea in having this act, so that there is a transparency between the shareholders, stakeholders, and making sure that okay, CEOs and CFOs, they certify that okay, there is an accuracy of the company's financial statement. So this is it, friends, in this lecture. Hope you have a clarity about the SOX compliance. So thank you, friends. Thank you for watching.